Most traders have heard the same line dozens of times. Fundamentals are for investors. Technicals are for traders. Charts decide the entry. Business quality doesn't matter for short-term trades. It's a half-truth at best. Technicals decide when. Fundamentals decide how much to size, how long to hold. What happens to the trade when the week goes against you? This video is about a single measure ArcAlpha calculates on every stock, a durability grade that captures the business quality underneath the chart. You'll see what the grade means, when it matters more, when it matters less, and how to read it alongside your technical setup without letting it do your thinking for you. Start with drawdowns. Two stocks, same chart pattern, both down 3% on the same day. In one of them, the business underneath is strong, cash generation is solid, the balance sheet is clean, earnings have been consistent. That drawdown usually comes back. In the other, the business is weak, losing money, heavy debt, deteriorating fundamentals. The same 3% drawdown is much more likely to turn into 7 than 10 then the trade is gone. Next, gap risk. Weak durability names tend to gap harder on bad news, simply because there's less underlying financial cushion to absorb the surprise. Holding through earnings or through a macro event becomes a very different trade depending on what's underneath the chart. Third, the hold decision. The same clean breakout in a strong durability stock can become a position trade held across several weeks. The same breakout in a weak durability stock probably stays a shorter duration trade because the farther out you hold, the more business quality shows up in the return. Fundamentals don't tell you whether to take the setup. They don't flip a bullish chart into a bearish one or vice versa. What they tell you is what the trade becomes if things go slightly wrong, a pullback, a miss, a rough week. That's where the two reads diverge. Which raises the practical question. How do you read a business fast without spending 3 hours on filings and ratios for every name you're watching? On ArcAlpha, every stock carries a single letter grade for durability. A, B, C, D, or F. The grade is deliberately coarse. It's a quick read signal, not a precision score. And a grade means a strong, profitable business with a durable financial profile. The company generates cash reliably, carries its debt comfortably, has consistent earnings, and operates in a healthy competitive position. Not a trading recommendation, just a read on the underlying business quality. An F grade means the opposite, weak, unprofitable, or financially unstable. Again, it's not a trading judgment. It's a business health judgment. A stock with an F grade can absolutely have a clean bullish setup and run. The grade just tells you the business underneath is fragile. The grade composites several areas of the business. Profitability is the company making money and how efficiently. Earnings quality are results consistent and aligned with cash flow. Balance sheet, can the company service its obligations? Valuation, what you're paying for what you're getting. Growth, is the business expanding? And analyst sentiment, how the broader research community reads the name. Each area gets its own read, they roll up into the single letter. Why a letter, not a number? Because in the flow of a trading session, a grade is readable at a glance. O or B is one kind of stock, D or F is another. The number underneath the grade exists for anyone who wants to dig, but the letter carries the headline. Every ticker on the platform has a fundamentals page. The headline grade sits at the top. Underneath, the individual reads that roll up into it, the component views, the recent numbers, the valuation context. Paid users see the full breakdown and the grade is uniform across tiers. There's no split between a quick read and a deep read. So the practical question is how to use the grade with the chart. Think about it as two separate reads. On one axis, your technical read, bullish setup or bearish setup. On the other axis, the durability read, strong grade or weak grade. Every trade sits somewhere in that 2x2. Bullish setup in a strong durability name. This is the cleanest combination. The chart says the entry is valid. The business underneath says the hold is supportable. If the trade goes against you by a few percent on a given day, the fundamentals provide a reason it's more likely to recover. Position trade candidates tend to live in this quadrant. Bullish setup in a weak durability name, the setup is still valid, but the trade is probably a shorter time frame one. A breakout in a fragile business is more likely to see that 3% drawdown turn into 7. So same entry but a tighter hold, a smaller size, and stop management becomes more active. The setup is real, the time horizon shrinks. Bearish setup in a strong durability name, the chart is breaking down but the business underneath is solid. Shorts in strong fundamentals names tend to work for shorter windows before buyers step back in because there's real demand at lower prices. Tactical, not structural. Bearish setup in a weak durability name. This is the combination most traders overweight, a chart breaking down in a business that was already deteriorating. The shorter time frame argument from the other quadrants doesn't apply as strongly here because there's less cushion beneath the price. Different sizing, different hold. There are situations where the grade shifts from background context to front of mind. First, Multi-day or multi-week position trades. The longer you hold, the more business quality expresses itself in the return. For a scalp, you won't be in the trade long enough for fundamentals to matter. For a position trade, they're load-bearing. Second, holding through events. If you're planning to sit through an earnings release or a Fed day, the grade is the question to ask before you accept the event risk. Strong grade names tend to take bad news more gracefully. Weak grade names amplify it. Third, drawdown decisions. When a trade is against you by 2 or 3%, the grade often decides whether you cut it or give it another day. Strong fundamentals under a bad technical week look very different from weak fundamentals under the same week. And fourth, the exception that proves the rule. For pure intraday scalps in and out within an hour, durability genuinely does not matter. You're not holding long enough for the business underneath to express itself. The grade is effectively irrelevant for that time frame. Two things the grade is not. First, it's not a chart flipper. A bullish technical setup in a D-grade stock is still a bullish technical setup. The grade is a separate read, it doesn't cancel the chart. A lot of fast-moving trades happen in lower grade names, the grade just changes how you take them, not whether. Second, and this one matters, durability is never applied as a filter on alerts. Every alert the platform surfaces is surfaced regardless of the grade. The grade sits alongside the alert as an additional data point. It is never a gate that blocks one. By design, your technical pipeline is your technical pipeline. The durability grade is something you read alongside it. So the platform surfaces the grade. You decide how to weigh it against the chart, given your time frame and your plan. And that brings track 2 to its close. Across 5 videos, we walk the full market intelligence layer. Regime as an observable state, the 6-signal risk gauge composite, the macro calendar of scheduled events, the unified market brief that weaves all of it into a narrated 3-minute read 3 times a day. And now the durability grade that sits underneath every ticker as a second dimension alongside the chart. Every trade from here on sits inside 2 reads. The technical setup on the chart, taught in track 1, and the environment and quality around the chart, which is track 2, what you just finished. That's the full market intelligence track. You now have the vocabulary for every indicator surface ArcAlpha shows on the markets page, plus the framework to read it yourself, without waiting for anyone to tell you what it means. Thanks for working through it. The environment layer is yours now. This is educational content and is not a recommendation to buy or sell any security.